Secretary met today with the leaders of major oil and gas companies. The meeting focused on how to lower gas prices with the national average just below $5 a gallon. President Biden has called big oil's profit margins unacceptable. But what, if anything, can be done about that? Let's bring in Bob McNally. He is founder and president of Rapidan Energy Group. He's also a former energy advisor to President George W. Bush. Obviously know a lot about this area, both from a company perspective as well as sort of all the political angles and strain right now. Certainly in focus for a lot of American consumers, that sticker shock, that price that they're paying at the pump, and then the ripple effect thereout. It seems only logical that an administration would have some questions for big oil, but give us some education, Bob. I mean, what really can be done? Are profit margins really unacceptable? Why is big oil always looked at as the bad guy here?
You know, those of us in the fraternity and the sorority of former White House energy advisors understand the brutal math of the oil market. And every president we worked for in the last, 20 years has confronted this, rising gasoline prices. And the truth is there are no short-term solutions. Oil is very insensitive, or we say sticky, to price on the demand and supply side. You just don't turn it on and off on the spigot. So there are no good solutions. And many of the things the president is doing, other presidents have done before. You want to talk with refiners ahead of refinery season. You want to see, you always ask the FTC to investigate gouging, but you never find any, but you do it anyway to make it look like you're doing something. But what's different now is the president has sort of raised things to a new and sort of vitriolic level. They're accusing folks of gouging and so forth, and at a level we don't usually see before. That being said, Courtney, I understand today's meeting was pretty conciliatory, pretty workmanlike. They tried to dial down the tensions. The one thing that emerged, though, that ought to be a concern, I think, for anybody thinking about oil prices longer term, is whether the administration is thinking of restricting the export of petroleum products like gasoline and diesel. That would be an authentic mistake. And I understood that came up in the meeting, and some folks left that thinking that could be really on the table.
Let me ask a couple of questions here, because there's all this talk about, as you said, Court, profit margins are not acceptable. I'm not sure whose profit margins the president is talking about. Is he talking about the big refiners, the exploration and production companies? Is he talking about the retailers? What are the profit margins, and how much have they risen here as oil has gone from 50 a barrel to 102 a barrel?
He hasn't been clear. The folks that sell us the gasoline and diesel at the pump are small mom and pop businesses.
Correct.
They have a franchise to their profit margins are tiny. They're making most of their money on the chips and soda, not the gasoline. Now, because we have a refinery shortage problem, because we don't have enough refining, we've been shutting down refining, we do have unusually wide spreads between crude oil and the wholesale price of gasoline and diesel. Those are $50 a barrel. Usually that's $15 a barrel. That doesn't reflect gouging by refiners of the oil industry. That reflects the fact that we have enormous pent-up demand. We've been destroying and reducing refining capacity, and the input costs for refining, natural gas and other things, are quite high. So there are free market, understandable reasons why you have these high margins at the refining sector. So
it's the margin at the refineries that have widened largely. The difference between what the crude costs and what the then wholesale product is, whether it's gas or diesel or jet fuel. That's where the change has been, and that is a function of lack of refining supply, right?
That plus the loss of Russian exports. Remember, Russia was one of the world's largest product exports. They used to export a lot of diesel, distillate fuel, a little bit to us, more to Europe. Well, that is in the process of going offline. We don't have the tankers to move it around. Russia's having a harder time redirecting its distillate exports compared to this crude. So
let me just ask you directly. Forgive me for interrupting, Bob. Are the refiners, as they deal with this shortage of refining capacity, do you see any evidence that they are, quote, gouging as they raise their prices?
None whatsoever. And you know what? The FTC has been watching this since 1920. It was in my book. Every single year they watch it. They've had investigation after investigation. No sign of collusion, market power whatsoever. This is just called too much demand, not enough supply. We're going to pay a higher price to produce this product.
Bob, before we let you go, I do want to get your take on the idea of sort of a federal gas tax holiday. Most people say this doesn't really do much. It sounds nice, but not only does it not really help the price at the pump, but you're also pulling potential revenue out of the Highway Trust Fund that, by the way, it desperately needs because of the infrastructure state in our country. So can you just give us your sort of understanding of where that stands and whether or not that would ultimately be helpful to solve what the administration is trying to do, which is to relieve pain at the pump for the everyday consumer?
Yeah, so miraculously, President Biden has managed to unite Democrats and Republicans, environmentalists, and the oil industry around the view that lowering the federal gasoline tax is a mistake. There's no real relief for the consumer. To the degree you even help the consumer, you'd just be stoking demand, which is part of our problem. Meanwhile, you blow a hole in the Highway Trust Fund, which is one of the few spending categories most Americans agree on: roads, bridges, and so forth. So you don't see Democratic leadership behind this. I think it's dead on arrival, and it goes nowhere. And in a week, we're not even talking about it.
Shepard Smith here. Thanks for watching CNBC on YouTube.